Welcome back. You're watching Your World at 10. Now, through the course of the last few months, the dollar has consistently fallen against most global currencies. Against the rupee, the dollar is down 4% year to date and 6% in the last 6 months. Today, in fact, the dollar hit a 14-month low against the euro following a Chinese report saying Beijing should increase its holdings of euros and yen in its foreign reserves. This conversation of a global alternative reserve currency has been going on for many months. To weigh in on that, the future of the dollar and the impact it could have on India, I'm joined by Hans Redeker. He's the global head of forex strategy at BNP Paribas, and S. Narayan, former finance secretary and economic advisor to the Prime Minister. Well, gentlemen, thank you very much for joining us. I'm going to start with you, Hans. How low can the dollar go? What are the estimates you're putting on that currency? Do you think that this is finally a reflection of America's finances? Or there is also the other view that all the strength that the dollar gained in the last year as money rushed to this safe currency, it is simply an unwinding of that strength?
Well, I guess that we have really to be careful what we are, or how we interpret the situation at the moment. I would just like to remind the audience that in the year 2004, and especially at the end of 2004, we had exactly the same discussion. We were talking about high deficit levels in the United States, and we were talking about the shift of global reserves. And as you might remember, in the year 2005, the US dollar actually gained against the euro from 136 to 117. Now what we see is at the end of this year is going to see the US dollar staying under pressure. There's still a lot of liquidity around, and this liquidity wanted to be invested into higher yielding assets. There is a flow of funds into Asia, and this flow of funds is just significant. And I do not see anything which is going to disturb that up to the end of the year. But entering 2010, we have actually to think about what is going to be the outlook for the year 2010. How we view things is that the globe is going to look very different in 2010. We will have rising Asian inflation rates. You will have very likely Asia starting to mop up its liquidity, and that is going to weaken the global liquidity situation, and it's going to have a currency impact. So if you ask me what is going to be the outlook for 2010, I guess one should not be too bleak on the outlook of the US dollar going into the next year.
But are you estimating, Hans, that at least till the end of this year, the calendar year that is, we will continue to see the dollar decline?
That is absolutely right, and we just made our calculations concerning how much of liquidity is still parked in the US. You have 3.5 trillion in money market funds, and in total you have in money markets plus sight deposits, you have 9.5 trillion US dollars, and this is not really giving you any yield because the short end of the US market does not yield. And on top of that you have central banks, global central banks, holding substantial deposits with the Federal Reserve. So they seem to be at the moment refusing to invest into the US government bond market. So all these forces are quite strong, and they will weaken the US dollar over the next couple of months.
All right. I buy your point, Hans, that 2010 will be very different. Mr. Narayan, if Asian economies start in fact tightening, and that also translates into an increase in interest rates in many of these economies, will that not just mean that their currencies will also strengthen further against the dollar? How do you read the situation for the dollar till the end of this year, and will it be very different next year?
I would totally agree with Hans that up to the end of this year, the dollar will continue to strengthen here, and it is because a lot of investors are trying to put the money into the Asian markets, where they see huge difference in opportunities between the treasury yields that they are getting in the United States and the opportunities in the primary and secondary markets that they are getting in the emerging markets. So I do see a lot of flow of money coming into the Indian markets particularly, and other Asian markets here. And therefore, the rupee will continue to strengthen against the dollar, and this will continue until the end of the year, most certainly. What I am quite concerned about is what it will do to the Indian economy, and what it will really do to our exports, as well as the kind of interventions that the RBI will make in terms of supporting the rupee.
Do you believe, sir, that if the dollar decline is only going to be restricted to the shorter term, as Hans points out, or we don't know what will happen in 2010, then do we have cause to be worried already in terms of the inflows that are coming in and being able to manage a strengthening currency in India?
There are a lot of economists who do not believe that the dollar decline will stop at the end of December. A lot of economists do believe that we are looking at a structural change in the price of the dollar and not a cyclical change. If this is true, then what would happen is that we'd continue to see that U.S. Right of printing its way out of its deficit over a period of time, which means that it would be a long-term decline in the dollar. There is this alternate view that is emerging, and I am just arguing that it is important that both the RBI and the Finance Ministry recognize that there is this alternate view. It might happen, it might not happen, but not to wish it away by adopting measures which have been just adopted in the past.
All right, so I'm going to come to you about mitigation measures for the Indian authorities, both the central bank and otherwise. But Hans, let me go back to you then. What do you make of the resurgence of this argument then that we need an alternative reserve currency? China is talking about holding its reserves in different currencies, not concentrated on the dollar, in the euro, in the yen. There is talk of other countries wanting to diversify their reserves. What do you make of this entire debate? Is it going to be a short-lived one or a long-lived one that will actually lead to some structural change in the global economy?
I guess it is very clear that we need to have a reserve currency which is anchored in a surplus environment. And as the US is not anchored in a surplus environment, it is currently having substantial deficits. But Europe is not offering the surplus environment either. So who is offering the surplus environment is China. But nonetheless, China still wanted to control its exchange rate. It has capital account restrictions. And as long as you do not have a free convertible renminbi, I guess that this currency reserve discussion is missing the main point. The main point is that China needs to grow into a position where the renminbi is taking a substantial part in the reserve currency holdings globally. And as long as China keeps its capital account restricted, I see that this current discussion is not really coming to the point. We have to have a move from a deficit country into a surplus country. And given that Europe has not the surpluses which would be required, China needs to take a much more active role in opening up its capital account and making sure that the renminbi is getting free convertible.
All right, a quick question to you, Hans. Do you believe SDR, special drawing rights, could at all be a alternative reserve currency? That's part one. And part two, what do you think will be the fate of Asian currencies like the rupee next year as Asian economies move towards tightening a lot faster than Western developed economies?
Yeah, first to the special drawing rights question. If you wanted to have a currency which is used as a reserve currency, then you need as well a central bank managing this reserve currency. So that means you need to have a central bank which would operate as a manager of special drawing rights. And I can't see that. I guess that is just a red herring, as they say. When it comes to the Indian currency and its further performance into 2010 and 11, what we have actually to recognize that when we talk about the US dollar and its strength or weakness, then there is the Asian currency bloc, which I certainly see appreciating further. And there's no alternative to this. It is part of the global rebalancing story. But when it comes to the euro, sterling and so forth, that is a totally different story. And that is actually what I was referring to when I was talking about what the US dollar might be doing in the year 2010 and 2011. So that actually implies that from an Asian perspective, you should expect much more of your appreciation of the currencies of the Indian rupee and so forth against sterling, against Europe, and then only against US dollar when we are entering 2010.
All right, Mr. Narayan, last question then to you. In a column that you put out in the Mint today, you have mentioned a few alternatives that the Indian government / the central bank can adopt to be able to help mitigate against a crashing dollar. You said accretion to reserves parked in other currencies other than the dollar, export in currencies other than the dollar, use dollar funds heavily to invest in infrastructure projects, and invest in purchases of commodities to increase our strategic stocking. What's your worst case, realistic but worst case scenario on the impact on India of this dollar decline, and which of these few measures do you think that the government needs to move to the fastest? I'd also like to point out that tomorrow is a monetary policy announcement. We don't know if the central bank governor will increase rates or not, but most people are of the consensus by the end of this year, rates will start moving up.
I'll start off from what Hans said, that the Asian currencies are going to see much greater appreciation than what's going to happen in the developed currencies. And if we are looking at that, then we have to look at what China is doing. China is keeping it's not becoming convertible, it's keeping a fixed exchange rate, and it is doing also other things. For example, it is increasingly going towards its RMB as an export currency and an import currency. In Indonesia, in Africa, it is possible to take out letters of credit for exports and imports in Chinese currency. Therefore, it's hedging against against all the other currencies by using its own currency. So obviously they have read something into this picture that we have not yet read. And this is my concern. This is my concern that the accretion to reserves that we are going to see in the next few months, this accretion, if it is again given the fact that our absorption capacities are comparatively lower in terms of absorbing capital flows, we have seen that in the last couple of years. Unless we take mitigation measures, we are going to see a very, very heavy appreciation of a rupee, and the RBI purchasing and through the market stabilization bonds is going to just make sure that the fiscal deficit is actually getting worse and not better. So we are getting into an area of problem, and these measures that I have suggested in my articles are just some of the measures which can help us out of it.
What would you expect to be the priority measure that the Reserve Bank will realistically adopt over the next few months, sir? You have a better reading of the policy environment in this country than any of us do.
The first thing that the Reserve Bank should do is that incremental accretions to foreign reserves should be less into the dollar. That means if they are heavily weighted into the dollar in terms of keeping their foreign reserves, they should get away with it. They should perhaps keep the stock unchanged at the moment, but the incremental flows, they should quickly move to other currencies, maybe the euro, maybe the yen, into a basket of other currencies which are getting stronger. That would be the first measure that they should take.
All right, Mr. Narayan, Hans, thank you very much for sharing your views on your world.